maybe just one more minute. Nice, nice. Right, let me just make sure I'm recording. Perfect. Alright, hello everyone. Today the class is on market maker models, and I'll teach you guys how I pretty much just use market maker models and how you can also use them, right? So first thing that we have to cover for market maker models is internal range liquidity, which is IRL, and then external range liquidity, which is ERL, right? So IRL, which is internal range liquidity, and I'll show you guys examples, are defined by fair value gaps. We all know what fair value gaps are. We all know what fair value gaps are, right? SMC concept, everyone uses fair value gaps. And then external range liquidity, the ERL part, is defined by highs and lows. And you can think of this as a formula. It's simple. When ERL is taken, then the next draw on liquidity is IRL, and then when IRL is taken, the next draw is ERL, right? So here, right? Let's just think of this. Let's say we're on the daily time frame, right? We have external range liquidity here under the low. We go up, go down. We take the ERL. What does price do? Price goes from ERL to IRL. We go back up into this daily fair value gap. Once we have to respect the fair value gap, obviously. Then price is just going to simply go back to ERL, right? IRL, ERL. Now, before I show you guys examples of how it works, right? There's time frame alignments. I'm telling you guys right now, I see a fuck ton of people just marking out market maker models just because this is how price action looks like. I'll show you. People see this, and they're gonna be like, "Oh yeah, this is a market maker sell model." That's not how it works, right? There's actual time frame alignments here. If you have a monthly PD array, so a monthly fair value gap, you have a daily MMXM. If you have a weekly PD array, it's a 4-hour, daily to 1 hour, 4 hour to 15 minutes, 1 hour to 5 minute, and then 15 to 1 minute. And I'll show you the trades I took based off of market maker models here. I'm just gonna give you guys time to write this down. I'll send screenshots in chat as well. Right, with just this, I'll teach you guys how just a simple way to just write down or chart down market maker models, right? So yeah, I'll show you guys examples I did this morning. Just gonna erase this. Remove drawings. Right? So here, I'll keep the time frame alignments with us actually. Right, keep in mind time frame alignments. I'll show you guys actual trades I took. So I'm not going to show you guys trades I didn't take. So I'll show you guys one from last week and then the two from today. So here we have the 4-hour chart, right? We're on the 4-hour chart. And what I'll do is, here, I'll replay this. 4-hour chart, what do we have here? We have a BISC, so I'm going to mark that out. We have our fair value gap. Alright, FVG. Simple, we just marked out our fair value gap, right? Now, what are we looking for? Obviously, what I said was IRL, so our fair value gap being IRL. Alright, I'm going to mark that out. We want to see price hit ERL, but first, we want to see price actually respect this 4-hour fair value gap, right? With our time frame alignment for market maker models, 4-hour PD array equals to 15-minute market maker model. So what I'm simply going to do is, from the 4-hour chart, I simply go to the 15-minute chart. And now what am I looking for? I'm looking for us to go here, respect this fair value gap, and then take out liquidity right here. And I'll show you this trade. I literally took this trade, right? So IRL, right? That's our ERL. But why are we not going to take ERL yet? It's because we have this fair value gap here, so price is drawn to it. Now watch what price does, right? I'll let it play out. I'll let price play out. What do we have here? Price dips into the 4-hour imbalance, right? This is the 4-hour fair value gap. Let me write that down. FVG. Right here. This is our 4-hour FVG, right? Now let me go back on the 4-hour chart and show you what it looks like. 4-hour chart. We respect the 4-hour chart and look at what happens. Simple. 4-hour to 15-minute. What does price do? We start pumping. And that's simply what market maker models are. You go from IRL to ERL and you just keep doing that. It's a repeat. It's a repeating process. Right? And let me just get this again. Time frame alignment. You can ask me questions whenever, by the way. Right? We enter this fair value gap. What are we targeting? We're targeting the high. Right here. And then that's exactly what happens. So that's a trade I took, and then I can show you, like, honestly, once you start doing them yourself, like, you can see them pretty easily. Here. I'll show you more trades I did. Was that drawdown? That's my only hang up. Drawdown. Okay, well, for entries, it depends, right? Because I took my entry off the turtle soup of this, and we were inside of a 15-minute chart here. Was it drawdown? I didn't have drawdown, no. So do you target at least the mid of the fair value gap first? Okay, that's a controversial one. Because sometimes what it does is it fully, because you never know where price is actually gonna go inside the fair value gap, right? You just want to wait to see more confirmation. In this particular scenario, I'll show you, like here, we had a turtle soup here, so liquidity, right? We ran liquidity, and obviously, where'd you place your entry and stop? Yeah, I'll show you right now, actually. Right? So in this case, what I did was, obviously, time frame alignment, 4-hour to 15-minute, 15-minute, here, this is what I did. Let me show you this. 15-minute chart, what do I see here? I'm going to take another. We created another 15-minute imbalance, right? This is a 15-minute fair value gap inside of a 4-hour fair value gap. What am I looking for? Remember, 15-minute PD array, 1-minute MMXM, right? So I go on the 1-minute chart. I want price to go in here, and then I'll get my entry right there. So watch. Look at what price does. And then price play out. It goes in my fair value gap, and that's my entry. I had a limit set, and then my take profit was here. Let me show you guys. Limit set here, stop loss under this fair value gap, take profit. That was a trade I took last week, and it hit. Are there times where price respects the fair value gap? Looks like your liquidity, but it's actually a fake out. Okay, most of the time you'll see that some fair value gaps do work, some fair value gaps don't work. Obviously, that honestly depends. You have to wait and see if the fair value gap actually gets respected. But I will say on higher time frames, price normally respects higher time frame PD arrays. Are you using the rectangle tool with the mid line? Yeah, exactly. I use the rectangle tool with the middle line for FEGs. And I'll show you guys like higher time frame examples. Or wait, let me show you guys the example from today. Today was a pretty obvious day for me, and I was looking for simple. Yo, Prox, your mic is open. Here, I'll show you guys this now. Right, keep in mind, time frame alignment, we're on the 1 hour chart, right? So, we're looking for a 1 hour imbalance. And here, I'll show you guys the trade I took. What do we have here? 1 hour SIBI. Now, obviously, you need to draw on liquidity. I love yums. My bad. Are there higher time frames you've been faked out? Okay, honestly, on higher time frames, I get faked out less. Just because, I mean, I trade forex too at the same time. Like forex, you have to make sure like everything is aligning with your market maker model, right? Like for forex, I'm also looking at Dixie and what Dixie's doing, because Dixie has its own higher time frame market maker model that it's in. Right, so we have a 1 hour imbalance. What am I looking for? Can you show us scalping examples? Yeah, sure. So I'll show you this right now. This is the trade I took today. 1 hour chart, right? 1 hour PD array, 5 hour MMXM. So what am I looking for? I want us to enter here, enter into this fair value gap. What happens? We enter, take liquidity. Now I normally take turtle soups recently. I've been into turtle soups and Romeo stuff. Stop. Here, normally I enter like here. Stop. Take profit. And this is only a 5-minute chart, right? This is a simple, fast trade. It was consolidating for a while. Hold up. And I think I have screenshots of this trade as well. Here, I'll show you guys proof that I did take this trade. Here, I'm just gonna get the thing. Here it is. I'll show you guys with the trade. Right? What do we have here? 1 hour BISI. Right? I go on the 5-minute time frame. We take the low, go back up. I'm on the 1 minute chart. 1 minute chart on here. Right? No, 5-minute. Right? It's just another example I took yesterday. 1 hour. We dip in. What do? I enter. Entry here. Take profit at the high. It respects it. Done. This was an Asia session trade too. The questions. What's your sizing for this kind of trade? Normally I just enter with 2 or 3 NQ. Do you not use OTE? No, I use standard deviation actually. I went over standard deviation in another class, but if you guys know, you know standard deviation. OTE, I used to use OTE retracements, but not anymore, no. Just because, where'd you place your entry and stop in that example? Here, let me show you. Misusing OTE. I personally don't like OTE. I use SD real quick. What do you anchors yours on? I do the manipulation leg, right? So in this here, like I'll show you. Like here, I'll do a trade and then I'll show you, right? Let me go on like here. Give me a time frame you guys want me to do a market maker model on. Any random one. 15-minute, perfect. I'll do an example from today too. Yeah, let's look for mine. Okay, you guys are probably not familiar with. Here, this is a perfect one. It's too complicated. Actually, I could show it. Okay, I'll show this one. Here, watch. 15-minute time frame. Perfect example. And this is the one I took too, right? Fair value gap on the 15-minute time frame, right? Price goes in here. What are we looking for? 15-minute time frame. 1 minute MMXM. I go on the 1 minute chart. Scalping territory. I know some of you like to scalp, right? Now what am I targeting? This high right here, right? Because after price respects this fair value gap, right? Price goes to ERL, IRL, then ERL, right? So now watch. Also for standard deviation, I would have it here. That'd be my standard deviation. Then I'm gonna let price play out. That would have been my entry. This turtle souping this, because I turtle soup. My entry would have been like here, stop loss, down here, take profit. I take profit at -2. Then here, let me do this. If it broke the midpoint, would it try to again? You know what? For fair value gaps, most of them, like on higher time frames, they do work, but that's something I couldn't tell you, because 50% of a fair value gap is effective, obviously, but sometimes you're gonna see the fair value gap only like here. Like this can always happen, right? Where sometimes it just does this. That's still respecting the fair value gap. Or sometimes you'll see price do this and then go to the top and then go bottom. That also happens, right? In this case, clear direction of where price wants to go. We're respecting this. This is 100% gonna hit, right? I'll just let this play out. And like a bunch of SMC users actually use market maker models. Like my room is cold. He's in this call actually. Tom, I know you guys know Tom. Diaco himself. They all use market maker models. I'm telling you, it's very effective. See that 30-point drawdown? That scares me. Yeah, but especially with these type of models, I'm telling you, like the take profit is amazing. Like Euro USD here. You know what? I'll go on the Euro USD and I'll show you guys what trade I took a while ago. Euro USD. When I tell you guys I took this trade, like I'm telling you, this trade was like a while ago, right? This is how a market maker model looks like, right? Why? Because look at what happens here. We take ERL. Here, I'm just gonna make this full. I'm gonna full screen this. Can you guys see my screen? Possibly, maybe. Right. I know it looks confusing, but let me show you guys, right? We took ERL right here, right? Now, look at this. This is a high time frame market maker model. This is like a very high time frame one, right? And let me just clear up stuff here. Actually, no, not even. Right, we're in a high time frame market maker model. This is the trade I took on EU a while ago. Look at what happens here. Price comes in this daily. This is a daily here fair value gap. Here, let me just do this. What do we have here? Daily fair value gap, right? Standard deviation. Whoever was asking me about standard deviation, the manipulation leg that took out ERL, right? We have it here. What is -2? It's a terminus, so we reverse. We come down here. Daily fair value gap. If you remember the daily time frame, goes into a 1 hour MMXM. What am I doing? We just change the time frame. Right. So when we dip into this fair value gap, and this is one of the cases where the fair value gap, right, it gets touched. It isn't the middle anymore, right? I think it was, who was asking me this? I think it was Kuhn. Yeah, Kuhn. So this fair value gap is respected, but we did go under 50%, right? Here, I'll show you the trade and why I took this trade. Daily fair value gap. Daily to 1 hour chart. This is the market maker model. What do we have here? I have my model. Standard deviation. I always use standard deviation, right? So standard deviation from here to my manipulation. I know most people would do here. I'm not doing that. What am I targeting? I'm targeting -2. And watch, this is a daily time frame, so price should technically hit this. Why? Because price goes from IRL to ERL, right? So IRL, what's the closest ERL? If fair value gap gets respected, up here, and that's a trade I got. This is probably one of my biggest trades, just using this concept, right? And I didn't use any other time frame but the daily and 1 hour, right? So watch, look at what price does. And here, I'll show you the entry I took. It was a late entry. Long stops. Put my stops here, and then my take profit was all the way at my market maker model. This literally passed me a Forex funded account. I kid you not. And I was just holding this. On the 1 minute, 1 hour time frame, it looks iffy, but here, I'll show you on the daily. Bro, I'm telling you, whenever you see this type of price action, it's gonna happen. Where I know a bunch of people would panic that, oh, we didn't hit this level, right? IRL, ERL, but like, I guarantee you, like, it is gonna happen. I remember myself, I was panicking my ass off when it didn't hit my TP here. My TP was up here, started consolidating, but we hit it. Recording will be available for this lesson. Yes, you called price touching previous day high. I think it was yesterday. Can you go over how you made that call? Previous day high. Okay, yeah, I think I can. Yeah. Yeah, let me just do this on NQ, right? This Q. Because all of my trades are MMXMs, so previous day high. Are you talking about Tuesday? I think you're talking about Tuesday, right? Does this model work with any instruments? It works with everything. This model is literally just a fair value gap to a high or a low, or a high or a low to a fair value gap. Literally only. That's the only thing. And then you combine more stuff, like there's original consolidations and stuff, but that's more advanced. But it genuinely, like, it works with everything. If you're talking about how I knew that we were gonna hit Monday's high, here, I'll show you. It was a market maker model as well. Could you not? Yep, on NQ. Right, so I'm just gonna mark it out like 12 a.m. and then Monday's open. You posted it yesterday at 12:18. 12:18. Let me just make sure. Yesterday, 12:18. Oh, okay, that's also a fair value. That's also a market maker model. Here, let me show you. 4-hour chart. Look at how simple this was. Right? 4-hour chart, what do we have here? I'll do this with you guys. 4-hour chart, we have a bullish fair value gap. What am I looking for? I want price to tap in. Now price did tap in. Here, and I'll show you guys. Price tapped in, but it never hit the level I was looking for. Obviously I took my trims, break even. My break even got hit, but what am I looking for? I want to look for this to get hit or this over here, right? And you'll see why this. So here, let me just let price play out. Now this looks like price just obliterated through the 4-hour fair value gap, but in reality that's just the wick, right? So that's still, the wicks can do the damage, but the bodies tell you the story. This just means it's respected, right? Bullish fair value gap, it's being respected. And how do I know it's gonna hit? Right, 4-hour chart to 15-minute fair value gaps. 15-minute time frame. I'm looking for an entry, and here, like, I'll do the exact same entry I did on the chart you're looking at, right? The alert. I did my entry around. Let me just make sure I'm right here, and then starting here. I'm not sure where my stop loss was, I'm gonna be honest. Right? So I'm just gonna put the stop loss there. And honestly, it's simple from there, right? Price really just hits my target, hits the take profit like that. And then there's this high too. But I don't think we hit this high. Yeah, like most of my TP was there, but let me just make sure. Maybe I'm wrong. Yeah, we didn't hit it fully. We hit like most of my TPs, but this one just never got hit. That's how I took the trade. Literally another market maker model, right? 4-hour chart, 4-hour to 15-minute entry, free trade, literally free. Someone messaged me, how old are you? I'm 18. That NQ would hit price to high, I remember, shorted that dump and then 100%. I was like, what? You were right. Yeah, no, I'm telling you, market maker models, like, it's the only thing I trade. And it genuinely just works, right? Like, I know a bunch of people were shorting over here for previous day low, but I saw this 4-hour imbalance get respected, right? Here, like once I saw this, and I was like, oh yeah, people are done for, right? I knew people were going for previous day low. I need to study upon this. Yes, you do. Why did you not enter at the no, okay, the thing is, with this huge wick, that's not my stop loss. My stop loss is never that wide, especially on futures. So let me show you a trick I do. Most people do this, right? 4-hour to 15-minute. What do I see here? Look, we have another imbalance here, but we're looking for here. Like, you see this, right? 15-minute fair value gaps everywhere. 15-minute fair value gap, 15-minute fair value gap, 15-minute fair value gap. You can always go on the 1-minute time frame and see if any. In this case, nothing happens unless you did this. This is an inverse fair value gap. I don't expect you guys to know this, but you would have been entered here if anything. But that's too late, so no. Never mind. I'll show you a trick actually. Why did you not enter the Canada initially? The reason why I didn't enter initially, because we're just dropping, right? I want to see the fair value gap actually be respected, and then I enter. If that's the question, G Money. But with the here, like, I'll show you another example. You can have precise entries if that's what you're asking for. Like, here, I'll go on another example. I'll show you like precise entries. No. Another 4-hour fair value gap, right? 15-minute chart. Right. This is like a precise entry that you can do, and this is like the best type of model I can show you. here. So I'm just gonna do that. 4-hour fair value gap, right? Now price goes into the fair value gap, right? Now let me show you 4-hour to 15-minute, right? Remember the time frame alignment. Now our target is here, right? Ignore that price action actually hit this, right? I'm gonna take that off. If you want a precise entry, watch. We're on the 15-minute time frame. What do we have here? A 15-minute fair value gap. And what did I teach you guys? 15-minute chart. 15-minute imbalance can go into a 1 minute MMXM. So what you could have done is 1 minute chart. Wait for 1 minute to go in here, which maybe. Yeah, look, the 1 minute chart went into the 15-minute FVG. That's a precise entry. You long. Now normally if I took this entry, standard deviation from here to here, or normally here to here, take profit would be here. Right? Now if this is a big ass trade, I'd probably go here or here, but just watch how price plays out. Stop loss, I'd put it under here. Let price play out. Do its thing. That's first take profit, -1. And that's take profit pretty much. You can't. I refrain from holding this long as well. But those are precise entries. So we can use whichever market maker model that has a fair value gap. Precisely, yeah. Sounds good. What is a win rate in practice? Win rate in practice, that really depends. I recently started back testing, but like if you're asking like if it works, then yeah, 100% works. Honestly, the biggest ICT like traders I know trade this model. Like here, if I look at the analysts in CC that are actually trading SMC, I know my room is cold. Trades MMXMs. Tom trades MMXMs. Diaco trades MMXMs. Halo trades MMXMs. That should just tell you guys like, yo, this is already insane. Any questions? Oh, actually, wait. I think yeah, I think playing for keeps actually trades MMXMs too. Here, and like I'll show you guys this too. Shout out to the MMXM trader for this screenshot, by the way. This is not my screenshot, but I'm gonna post it. And then I have here. Will you explain your stops again? They're confusing me slightly. On one example, it was equilibrium on the higher time frame for value gap. On the other, it was the bottom of the higher time frame for value gap. Yeah, I'll show you. Honestly, stops really just depend on how much you want to risk. But here, like, I'll show you like how my stops work. I'll just make it chart, 4-hour chart. That's it here. This is perfect. We have a Euro USD trade here. I'll take this out. We just mark out our ERL, right? And then what do we have here? 4-hour BISI. I want to see price run into this, right? 4-hour time frame goes into the 15-minute, but I'm just waiting, right? Okay, that's too fast. I'll show you. 15-minute time frame. What am I looking for? Now, normally everyone has a different model, obviously. For MMXMs, I'm either looking for a entry on this, or I'm looking for an entry after taking this liquidity, a turtle soup, which here, a turtle soup of this high, right? So what does price do? That's likely news during London or something like that. Now look at this. We turtle soup that. Now normally I look for a PD array here, right? So I'm looking for either we inverse this fair value gap. If we inverse this fair value gap, this would have been my entry where I go short. At the inverse, stops above the high. Take profit at the low, right? And then if you want more precision, I'll mark down everything. Original consolidation. Accumulation phase 1, accumulation phase 2. Right here we have our smart money reversal, which is sell program activation. Now I'm looking for an inverse of that fair value gap, which happens. I'm in the trade, and it hits take profit. I didn't take this trade, by the way. I literally just opened it. Sorry, I had to go change my son's diaper, but yeah, when you called the previous day high touch, I thought you were smoking something. What if every market maker has a fair value gap? Which should we use? If every market maker has a fair value gap, which should we use? I think I know what you're talking about. Maybe, possibly. Are you talking about when there's two fair value gaps like this? One, then two? Like next to each other? Yes. Perfect. There's something called the breakaway gaps, right? In trading, there's something called breakaway gaps. In this scenario, like, we didn't tap into any of those, right? But honestly, I'm either looking for a rejection off the first one, because the second one could be a breakaway gap, or normally I trade off of RDRBs, which is another type of fair value gap. I guess you can call it another fair value gap. But in that case, you just have to wait and see what price wants to do. Like I suggest you guys go in my channel and like look at the trades, the screenshots I post. Like here, I'll show you guys this one right here. This is a perfect example of what you're asking. On my screen, we have a 4-hour inverse fair value gap here, and a 4-hour BISI right here. See how the wick respected the wick destroyed both of them, but the body respected. That's just more confirmation for me that we take out this high. This is when we had a 4-hour BISI right here, and we have another 4-hour equilibrium inverse here. Only today I noticed your channel will pay attention. Interesting. The FVG you drew on your USD could also be an IFVG. This one? No, that's not what an IFVG is. An IFVG is when a fair value gap, like right, this regular one, gets disrespected. So watch. Right, this is a normal fair value gap, but what happens? The body closes under. Now it's an inverse fair value gap, because we just disrespected it with the body. That's what an inverse is. But in the case, in the thing I drew here, we didn't close above it. We went in, went down. get you. Yeah. Honestly, it's simple. And recently, Fruits told me, bro. Fruits has put me on back testing, bro. I'm telling you, I've been back testing these models, and it's crazy. It's simple. IRL, ERL, ERL, IRL. Fruits is like veggies, actually. Try to automate this. I mean, trading bot. I don't really use bots. No. Maybe one day. Can you show an example like with Bitcoin? I probably could, honestly. Bitcoin. Here, let's look for an example. I mean, it's here. We have a fair value gap here. We're on the 4-hour time frame, right? 4-hour to 15-minute. 15-minute look. So here, and what I'll do is take this out. Simple here. Watch. 4-hour imbalance. We tapped into it. What are we trying to go for? ERL, right? IRL, ERL. Simple. 15-minute chart. And I'll make it detailed actually this time. Here, watch. We went in here, dipped into the 4-hour imbalance. We're on the 15-minute time frame, by the way, right? Now watch what price does. Price is gonna target this. It's simple. IRL, the 4-hour imbalance. Now it just wants its ERL. Look at price. It's gonna fly to our high. It's super simple. I'm telling you right now. Like especially if you combine your own models with this, it becomes crazy. It is crazy, yeah. Can you show the same trade on GC? GC as in gold futures. GC and gold and ZAO are the same thing. But here they cost. they work on pretty much everything. Honestly, market maker models. Any specific time frame you guys want me to go on? Like here, look at this one. 15-minute. I'll show you a 1-minute MMXM. 15-minute chart. We go up. Where's our low? Simple. We almost have equal lows here, right? Tap in here, 1-minute time frame. Looking for an entry. Obviously, you do your entry according to your own thing, right? Let's say we enter here, take profits down there. Stops. If I'm feeling cocky, I would have entered already, but like something like that maybe. And let me just let price play out. You guys get the gist of it though, right? They pretty much work all the time. That would have been my take profit, but the low should get hit. Okay, bro, like, there we go, finally. Right, that's a free 12-hour trade if you actually took that. It is crazy, yeah, it is crazy. Here, like, look, we had this market maker model inside of another one. What do we have here? Another 15-minute fair value gap. If you get a late entry, look at this, right? Another 15-minute fair value gap. I go on the 1-minute. If I want to re-enter the trade or something, right? Stop. Stops ran. Entry. Stop loss. I put it above here. Take profit at the same place, or and use standard deviation. Here to here, or here to here. Like, bro. It really doesn't get as simple as this. That's 2 winning trades. Using the 15-minute time frame. Recording will be available in the education system. Yeah, it will. I'll send this to the staff team soon. Any questions? Questions, concerns? Or actually, wait, yo, Tom, want to say something for MMXMs? How you use them and why you actually use them?
Yeah, me?
Yeah.
Damn, I just joined back.
Because like the class is done, but like I'm telling them like, yo,
Oh, okay, okay.
MMXMs are the way. Like they're genuinely insane.
Well, yeah, pretty much. I don't know. Let's say I had to go do stuff, but to add on to pretty much, buy and sell models are kind of just how price delivers and price actually books, and how the algorithm actually books price. So, I think you went over, the buy program, sell program, etc., and it's, you know, for me, I think my favorite model to trade as an SMC trader is like the reaccumulation of a sell model or the redistribution of the buy model, because it's such a clean and it always hits type shit. Like, sorry, I'm on the spot here, but pretty much what they are is the most, the whole reason a market maker model forms is and completes is to rebalance and redeliver the whole portion of the first program. So you've got for a buy model, you've got your sell program, which is like the first half of it, and then you have your reversal. And the whole reason it goes back up is to rebalance that first whole leg and sell program down. You can flip it the same way for a sell model, and the more you watch them play out and the more you look for them, the more you'll see how efficient and how great price moves and efficiently price moves with market maker models. So make sure have a look for them, have a look for all the stages. If you see consolidation and you see an expansion away from an area of consolidation, look for PDRAs, and look for price to come back later and draw towards it, because they can be really kind of fun models to trade, and definitely go and back test market maker models on every time frame. I don't know if you went over this, but there's this part and this little thing you can use, and it's pretty much daily PDRA, and then drop down to I think it's the 4 hour, and look for so off a daily PDRA you get a 4 hour buy model.
No, it's 1 hour daily, and then
1 hour. 1 hour, 1 hour, yeah, 1 hour, and then from 4 hour you got 15-minute buy model, and then from the 15-minute you got. From the 1 hour, you got a 5-minute bar model. From the 15-minute, you got a 1-minute bar model, and use that and look for market maker models, and it makes everything so much more easier in finding market maker models and being able to tell where the draw on liquidity is. And then if you use it in conjunction with IRL and ERL as well, they're some of the best ever models to trade. So that's kind of it. You put me on the spot, bro. I just came back home, dude.
Sorry. Yeah, but the class is pretty much done. I'm telling you guys right now, genuinely, One of the best. It honestly, in my opinion, the best SMC model.
I agree.
And like obviously, we all know who ICT is. The guy who literally made SMC ICT concepts. He said that this would be the one model he would trade for life if he had to trade one model. Yeah, that's pretty much it for the class. Honestly, I recommend you guys go back test this, back test and forward test this, because you'll see these work every single day. Any questions before I end the class? I got you. Perfect. I'm just gonna stop the recording.